The Calgary real estate market, just like many markets around Canada, had a very rough start to the year. We didn't see anywhere close to the sales that we were actually expecting, and inventory was constantly building up. However, I think this month the narrative for Calgary has changed. What has changed? Certain segments, certain property types are now behaving differently, seeing more demand, versus other ones keep declining and are losing price. So, which segments of the markets are performing well and which ones are not? That's what we're going to discover in this video. Calgary does have few things set apart that are going to allow certain segments of the market to continue doing really well and set new record prices this year compared to last year, while other property types won't be able to perform as well. With the rampant construction that we are seeing everywhere in Calgary and a shift towards multifamily homes, there are certain properties that have a key advantage in this market to continue increasing in price because of the scarcity of the amount of inventory actually available on the market, and that is what we are also going to explore in this video. So before we get started, hey guys, it's Iyer, your Calgary Realtor, and whether you're a buyer, seller, or investor in this market, definitely reach out. My link's in the description. You can book a free consultation call that has no obligations, but I would love to give you all the information so that you can make an informed decision going forward in this year. If you're looking to buy in the 3, 6, 9 months, still reach out right now. I cannot emphasize this how important it is, because then you can get set up the right way. We can design a game plan based on your short and midterm, long-term goals so that you're not just going with the market depending on when you decide to enter the market, and you are prepared well ahead. Apart from that, guess what? I also have a lot of guides that I'm constantly putting out, and they are available in the description for a free download. These are going to be extremely valuable. I have the community guide, the buyer guide, and now I'm going to put specific quadrant guides out also in the next couple of months. And these are going to be extremely useful to really understand what the vibe is for each community type, because guess what? All of Calgary is not the same. And this is something that's extremely important to understand as a buyer. So make sure you get those guides. Those will be very, very helpful to you. Now, without further ado, let's get into the Calgary Real Estate Board Market Report. And we start by their summary and see what they have to say about the market overall. So thanks to steep pullbacks in the apartment condominium sector, the total residential sales in Calgary actually eased by 17%. So a lot of that sales drop was caused by the drop in apartment condominiums. And despite this happening, and this is compared to May last year, and despite the sales dropping by 17%, they actually remain 11% higher than longer term trends. So that is something that is very, very different from Calgary, and it is highlighted somewhere down here that we will go into. Higher than longer term trends, new listings continue to rise this month compared to sales, resulting in further gains in inventory levels. However, the monthly gain in both inventory and sales prevented significant change in months of supply. So even though inventory has been increasing, the sales also has been increasing, and so the months of supply has actually remained the exact same as last month. So we are in a relatively balanced market. Prior to the economy uncertainty, Calgary was dealing with a seller market conditions. We were in extreme seller market, not even just a regular seller market condition. And so the recent pullbacks that we are seeing in sales and inventory has actually helped shift us more towards balanced conditions, taking pressure off the prices. So this is where we are a little bit different from other provinces. And this is by the chief economist of the Calgary Real Estate Board. We actually had a meeting with her last week where she went over all her predictions for the Calgary real estate market, the economy of Alberta, and all the job employment opportunities. So I'm going to put together a slide deck and a video out in the next week. So if you want to watch that video, make sure you subscribe, and that way you'll get notified when I put that video out. It is remarkable the amount of data and value it will provide you to get an understanding of what the next couple of years for Alberta is going to look like. Now, this is a different situation from some of the other larger cities where their housing markets were already struggling prior to the addition of the economy uncertainty. So other markets were already not performing really well, while we were extremely good as far as being in a strong seller's market. So now when we have these drop in sales, it's nowhere as bad as what other provinces are. And in fact, we are in a balanced territory, and it's where we should be. And this is a good market both for buyers and sellers. If you ask me, it's healthy, and it's where properties are valued correctly and sell for what they should be selling for. Recent inventory gains are actually creating pockets of the market that are struggling with too much supply, while other areas, supply levels are still low relative to the demand, so resulting in a divergent trend in home prices. So while last 2-3 years was a rising tide raises all boats, now things are splitting. Where there is actual value, that's where we are seeing the buyers go. That's where there's a lack of inventory because there's lower turnover in those areas, and other areas are seeing higher turnover and lower demand. Detached and semi-detached home prices have remained relatively stable this month and are still higher than last year's levels. Meanwhile, row and apartment homes have reported modest monthly price declines, and May prices remain below last year's levels. So detached and duplex are still setting records versus other two property types are not doing so well. So now with things splitting and doing differently, and it's not a given that all of Calgary is going up. That's why watching a video like this will really help you so that you do not make the wrong decisions and get stuck in a property that is just on a downward trend for the next couple of years. Now, as far as the benchmark pricing goes, the total benchmark price went down by $1,200 month over month, bringing us to $589,900. Detached home prices are at $769,400, which is an increase of $100 month over month. Duplex homes went up by $697,300, which is an increase of $5,600 month over month. The row homes went up by $450,600, which is an increase of $3,800 month over month. And apartment prices went up. Apartment prices are at $335,300, which is a drop of $700 month over month. How are benchmark prices performing across different parts of the city? So as you can see here, north is at $550,000, northeast is at $500,300, and all of these numbers below it are the month over month increases or declines. East is at $427,200, southeast is at $579,800, south is at $586,200, west is at $729,600, and they saw the most gains at $12,200. And this is no surprise because these trends have shown in the past years too. When the market starts going up, West sees significant gains. In fact, last year for 3 months in a row, we had West doing around $14,000 increase per month. And then Northwest is at $650,400, which is an increase of just $500. And City Center is at $596,500, which is an increase of $1,700. So as you can see, the west side primarily together with City Center is the one that's actually going up, and the benchmark price across per district type has actually been going down month over month. Now this is a slide you'd want to pause and look at if you're a buyer or seller. This will help you understand where the pricing for the benchmark is for any given area, but also shows you affordability by property type and area. So for example, if you wanted to buy a 500,000 home, but you do not want to buy in the east, then you realize that you need to go into probably duplex homes, and then you have a lot more options available. And even that, it will show you which areas you can and cannot afford. And it just helps you overall quickly decide what property type is right for you depending on your budget, because budget's the one thing we cannot change. How much we get qualified for is all we can afford, but at least you can get a better property type in a better area for that same price point. Now taking a look at price growth, and this is for sellers. So as you can see, the total residential overall has come down year over year, but when we look at specific property types, overall detached and duplex are the ones that are actually doing well. Apartments and row townhomes have come down year over year, but even between detached and duplex, there are specific areas that are actually doing well, and those are primarily the northwest and west, and even I would say South's probably doing a little well. And for duplex, actually southeast is doing pretty well, followed by Calgary's overall, and then City Center. So this gives you an idea of the growth, and then you can see where most value was lost. And northeast is primarily the largest in all property types, biggest being in apartments that have seen a decline of about 4.5% year over year for northeast apartments. And the total residential for Northeast has actually declined by 5%. So now sales for this month was at 2,568, And so last month we were at 2,236. So that is a healthy increase month over month, and we are trending up pretty well. How does that compare to the last decade? So if you see our current sales for May compared to the May over the last decade, and you draw a line right here, you can see that when last 2 or 3 years, the sales were, of course, not normal. It was way beyond what we would expect in a regular market. And then 15 to 18 was not a healthy market either. So sales were dropping and declining, and it dropped significantly in 2020. So the economy wasn't too great back then. Considering what an average is around here, I would say our sales are doing actually pretty well, and we are higher. That's why we are higher than the longer term trends. As far as new listings go, you can see the new listings are at 4,842 right now, and last month we were at 4,038. So new listings still continues to go significantly up, and that's definitely going to be increasing the amount of inventory that we are seeing. So the inventory for this month was 6,740, and last month was 5,867. So of course we have seen a significant increase in inventory. There's far more options now available for buyers to pick from. However, there are also more buyers coming off the sidelines as we saw the increase in sales, and that has then resulted in a balanced months of inventory, which we will see very soon. As far as the total inventory for the longer term trends go, if you draw a line across the last 10 years, same that we did before, you can see we had extremely low inventory over the last 2 years. So that's not a point of reference that we want to use. If we use a healthy inventory, I would say we are about here, and we are already sort of on that upper end. As far as 1819 go, that was peak inventory. We do not want to see levels close to 9,000 at all. So right now we are still okay, and we are in a balanced market. If we come closer to, so I would say 8,000 plus, and if the sales don't pick up enough, then we would potentially go into a buyer's market, which I don't think is going to happen. I think we're going to have more of a sideways trend for Calgary for this year, relatively slow on sales and price growth, but we're still going to see price gains for the property types and areas that actually matter to buyers. Now, moving on to months of supply, like I said before, since sales also went up together with the inventory, the months of supply actually remain flat month over month at 2.6 months. So balanced market, and we're moving sideways. Now taking a look at the months of inventory by property type and by area. As you can see, the red lines that I've marked are where we were last month. Some areas like Northeast apartments have seen a significant decline, even for duplex and row townhomes. However, other areas have declined just by a little bit, mostly stagnant, and then a few areas have gone up by a little bit. So you can see here the months of supply, significant drops in certain areas. So how this is going to help you as a buyer is if the months of supply is higher, so if it's 4 months of supply, you're going to have a lot of more options for that property type in that area. So reference what bar you're looking at depending on what area it is, and that's how you know how competitive you have to be. So for example, if you're looking at a detached property in Northwest or a duplex home in Northwest, that is going to be pretty competitive, and especially if it's priced correctly. We are still seeing multiple offer situations on the ground, and we are still seeing bidding wars for properties that are priced really well. Most properties that are priced well are actually going between 3 to 7 days right now. If you require price drops after you've listed, then generally you're on the market for 20 days over, and your property sells around the 35th day to 40th day right now. So now moving on to the very specific stats. If this interests you, of course, you can pause and read into it a bit more. The key ones that I want to highlight, as you can see, month over month, sales for detached has actually gone down. Has actually gone up by 175. And for duplex homes, it's barely gone up by, I would say, 50, 60. And then row town homes, now duplex only makes 10% of the market, so it's all relative. Row town homes went up by around about 100, and then apartments have actually gone down month over month. So apartments are not doing too well because the amount of new listings that we are seeing is actually increasing month over month. We have 200 more listings this month for apartments, but on the other hand, the sales are actually going down, so that doesn't look too well. So the inventory has actually gone up this month again to 2,000 for apartments. That's extremely high. For detached, we are at 2,900, subtle increase of 400. Duplex homes have also gone up. And then finally, you have row townhomes have also gone up by 100. How does this all reflect into the months of supply? As you can see, detached was at 2.28 months of supply last month. Right now, we are at 2.35. So even though the overall months of supply looks the exact same, it depends on what property type you're going after that you will experience something different in the market this month. So detached has actually gone up to 2.35, so that's eased up a little bit. But duplex homes on the other end has tightened up. So last month we had 2.5 months of supply. Now we only have 2.1 months. Last month we had 2.83 months of supply for row townhomes. Now we only have 2.4. So that has again tightened up a little bit. And as far as apartments go, that has eased up a lot. It's gone from 3.17 to 3.6. Apartments is the only one I can see right now that could very easily go into a buyer's market this year. It's not going to perform too well. I do not expect sharp drops. Prices are a lot more sticky on the way down. It's going to be something that's going to happen. It's cyclical. Apartments are always this way in Calgary. So a few years of subtle declines and it'll keep fluctuating up and down. Whereas detached and duplex, I expect to do pretty well this year. Now taking a look at the summary by the Calgary Real Estate Board for each property type. So as you can see, the new listings in May actually rose to 2,419 units. And most of these were for homes above 600,000, so not in the affordable range. Sales activity has actually slowed across most of these price ranges, supporting a shift towards more balanced conditions and a relative stability in prices. Now, districts that are facing more competition from new homes products are the ones that are seeing the larger pullback. So now the fact that resale homes have to compete with new home sales and there's not enough demand for both, that's where you're seeing a larger pullback because now you have to match and provide incentive for buyers to go for older properties. Northeast District has actually seen the largest pullback in resale activity because there's a huge amount of construction happening in the north, so it's no surprise. And the sales to new listings ratio is actually down to 41%, and the months of supply was nearly 4 months. Now, prices in Northeast have actually seen significant declines, which has offset the increases that we have seen in city center, west, and northwest districts. As far as price drops go, now these are special graphs that I create for you guys. This is not available anywhere else. As you can see, the detached price drops has been on a slight increase over time. This is for the past 2 months. And as far as the amount goes, the magnitude is not really increasing that much. And this is all in the affordable section. Well, affordable in codes, which is like $1 million right now. So the amount of price drops is not really increasing in magnitude, but we are still seeing a subtle increase in the amount of price drops happening on the detached side. How does this then reflect on what buyers are willing to pay? As far as property selling above and below list price, you can see that started contracting right here towards the end of April as more and more buyers came in. Then there was a high level of uncertainty, which resulted in this saturation of people paying below list price. That then informed this trend, which is slightly going, I would say, going down. So people paying below this price, but not to a huge amount. And I expect this to remain pretty stable and just continue sideways for this year. As far as detached sales per day, this is a new graph. I've never put this on a video before. And it's just interesting to see how long we take to hit those peaks and how the optimism is in the market for the buyers. So you can see right here on May 9th around, we hit the same levels that we did, but we hit those levels on April 4th last year in terms of the amount of sales happening per day. So it's been a slow climb this year compared to last year where we suddenly jumped up. So it's been a slow climb, but we've actually managed to reach there for the amount of peak sales per day that we are seeing right now. And I expect this to continue remaining this way potentially for spring and then come back down. But of course, we're going to have a shorter time up there since we are already 1 month late into the spring market. Now, as far as this is the seller sentiment side, and this is the buyer sentiment. So this is just numbers for all the graphs that I just showed you, but I'm going to quickly focus on a couple numbers right here that will highlight what the buyer and seller sentiment is in this market. So as you can see, the number of price drops that happened in March, 22%, April, 26%, And then the amount of price drops that happened in May, 25%. So this is not enough of a change to say that it's going the other way, but it has reduced. So buyer sentiment is how much people are willing to pay above or below this price. For the people paying below this price, from 61% in March to 65 in April, and then 68 in May. So that is definitely still increasing for detached properties, and people are still wanting to pay below this price. And that is also reflective in the amount of price drops and price drop properties actually getting below this price. So despite you dropping price, in March, 84% people paid below this price, or below the dropped price. And then in April, 87% people paid below the dropped price. And now that increased to 90%. So for detached properties, definitely buyers are still looking to try and get more deals and still don't feel the price accurately reflects what the property should be selling for. As far as days on market go, just very quickly, as you can see from the start of April, it's on an upward trend, and then out all through May, now it's been pretty much sideways. Now going over the summary for the semi-detached properties, as you can see here, 428 new listings in May were met with 256 sales. So the sales to new listings ratio is 60% per month, which is pretty good for a balanced market. So this segment's doing really well. This slowed pace of inventory has actually helped the months of supply to remain above 2 months. Semi-detached homes continue to remain less than 10% of the market though, so they're not going to have a significant impact on the overall movement of the market. This is in part due to the construction pattern shifting more towards multifamily homes, so which is the row style over detached, and this is one of the reasons we do not see the same inventory build as row townhomes and apartments. So we're seeing a lot of inventory on those, but not so much for duplex homes. Now, the Northeast has the highest months of supply at nearly 3 months and is reporting some price declines, while the tightest conditions have been in the Northwest, where prices continue to rise. Now, taking a look at how the price drops have been trending. So as you can see, your price drops were increasing month over month. Of course, we do not have as much data since it's only 10% of the market. So there's lesser lines for sure, and it's mostly moving sideways. So looking at how much certain properties in that area have sold below list price and what their value is will give you a good idea of how sellers should actually be pricing their property and being able to sell on time. Now, taking a look at about properties selling below and above list price. So as you can see here, it's again a sideways trend. We were declining quite a bit over here in April, but now that has stabilized and it's mostly a sideways trend. And as far as the amount of sales that we are seeing per day, very similar to what we saw in detached. We hit those levels way earlier last year, almost again at the start of April. Now we are almost there at the start of May. So we are a month late to the spring market, but the sales per day, I would say the momentum that we've been building up since the start of the year, setting higher highs, is happening. And we finally hit those levels that we saw at the peaks of last year for per day. So it just shows you the overall optimism that's returning back to the market. Now, looking at these same numbers that we did for detached, looking at them for duplex homes, as far as people pay, as far as the price drops, 23% back in March, 23% in April, and then 25% in May. So price drops have increased from April to May. 1 month's not a trend, so we're going to see if this increases again next month. As far as buyer sentiment goes, buyers paying below this price, 67% in March, 67% in April, and then 73% in May. So buyers are definitely going to be putting downward pressure on the prices for certain segments in these duplex homes. Now, of course, this is all areas. So while Northeast might be declining a lot and be resulting in what this higher percentage is, other areas can still go up in this same amount of time. So the amount of price drops resulting in also still properties selling below this price, 95% in March, 84%. So that actually reduced in April, so that was good. But then it went back up to 93% now for May. So obviously there is some downward pressure, and I think that a lot of that is coming from districts that are not performing too well in the duplex home type. As far as the days on market, you can see that we peaked around the middle of May, and since then the days on market has actually been coming down a little bit as we went towards the end of May. So duplex homes, definitely tighter inventory in certain areas, and they are selling faster. Now let's take a look at the summary for row townhomes. As you can see, row home sales have eased over last year's near record high price. However, they still stayed well above the longer term trends. The gain in new listings has continued to cause further inventory gains. So we're seeing a lot of inventory for row townhomes. While inventory levels have improved across all districts, we are starting to see higher months of supply in the northeast district, so very similar to the previous two property types. So we are at almost 3.5 months of supply now there, and that's putting downward pressure on prices. The north and northwest and south areas have reported higher year-over-year pullbacks in resale as improved supply choice for new properties are impacting the resale activity. Now, as far as price drops go, you can see the price drops increased from the start of April for townhomes. That has sort of become more of a sideways trend. Absolutely nothing selling above this price. These two are probably anomalies. So most properties or all properties really for row townhomes are selling below this price, and the magnitude of that is not really increasing. It's mostly around max the 50,000 mark. As far as property selling above and below this price, it is a sideways trend right here. So you can see it increased a lot and peaked around the start of May. And ever since then, it's been moving more on a sideways trend. And also, we are not seeing an increase in the saturation or magnitude. So overall, it's stabilized a little bit. And as far as the amount of sales happening per day, row townhomes are not like detached and duplex homes. They haven't managed to reach the peaks of last year. They did a little bit here, but then all that negativity in the market brought the sales back down, and it's starting to trickle back up. Row townhomes does have the chance to come close to this point. Apartments, I don't think, and then we will take a look at that and see what that is doing. As far as the overall stats that we've been discussing so far for the previous two property types, how does that look for row townhomes? As you can see, the amount of price drops, 21% in March, 26% in April, 32% in May. So obviously price drops has been on a constant increase if you look at the very specific percentages. As far as property selling below this price, 66% here, 69, and then 73% in May. How is that downward pressure then resulting or in where the buyers and sellers are actually able to meet each other? So if you look at the amount of properties that saw price drops and still sold below this price in March, it was at 85%. That corrected and reduced a little bit to 80% in April, but then shot right back up to 86% in May. So obviously, people are still not pricing their properties correctly, or the buyers really want to find those good deals and are not in a rush to buy and are bidding severely under the list price. So generally, the pricing needs to be corrected for where the market's at, and we are nowhere close to where a capitulation should be. So let's see what happens next month going forward. Now, taking a look at the amount of days on market, as you can see for townhomes, obviously the days on market is on a continued rise because the buyers and sellers are not able to meet each other on price. So I expect this to continue to go up. So townhomes is definitely telling a very different story so far than the detached and duplex homes that we looked at. Now taking a look at the summary for apartments finally. So apartments is definitely not doing very well right now. And while the price does show declines, one very important thing to really call out is apartments actually have seen significant gains over the last 2-3 years. So while prices are dropping and dropping quite a bit, it's nowhere close to the gains that a lot of these property owners have actually seen over the last 2-3 years. So it doesn't really matter to them as much. Now, if you're a buyer, depending on your affordability, there might be different types of parts of the market that we would get you into. But that is just something to keep in mind because it was part of that economy report that we studied to try and understand what the impact on apartments and all different segments is going to be like. And that was an interesting observation because the news headlines only show you 5% decline, but they don't tell you that it actually went up by 30-40% first. The apartment prices actually doubled. So yeah, let's continue. While new listings were lower than levels reported last year, they've remained high compared to the amount of sales. So this caused the sales to new listings ratio to actually drop to 47% this month. This contributed to a further inventory gain up to 3.6 months now. High levels of apartment rental units are under construction, and this is something very interesting to see. It's part of that economy report that I'm going to be putting out very soon. So make sure you subscribe if you want to look into that. It's crazy how many purpose-built rentals are actually coming up in Calgary. and they're adding to the rental supply and contributing to the rent adjustments. So slowing condo ownership demand coming from existing renters, potential investors, and contributing to that shift witnessed in the apartment condominium sector. Now, the steepest declines occurring in Northeast, no surprise there, and Southeast districts, where competition from new home market is weighing on pricing. As far as Southeast goes, it does depend. Now, if you are a bit more central in the Southeast, those apartments are holding pretty well, but compared to, for example, the ones that are more on the outskirts. So that is something to consider. While prices have eased and are below peak levels, recent declines have not offset the double-digit gains that we have reported over the last 2 years. So this is exactly what I'm telling you about. If you look at the graphs, longer-term trends, the short-term down, it doesn't really matter as much. Now, as far as apartment price drops, so how many price drops are happening on apartments to be able to sell them? So you can see here it's pretty much mostly a sideways trend. If anything, we are setting actually lower peaks right here. So it peaked around here and then it's getting lesser and lesser. So I think we will find some sort of capitulation, even though the months of inventory is going up, but we are not seeing a huge shift in the trend line. So it's pretty much sideways. I don't expect anything to sell above list price. Everything is selling below list price. So make sure as a buyer you are getting that deal. That is what I'm doing for all my buyers right now. And as far as, this is what I meant. As far as all properties selling below list price, this is on a constant increase. So you can see here, while no properties were essentially seeing price increases is what I meant. Most properties are now all selling below this price, and that trend line is actually increasing. So if you draw it out from here, which is about mid-May, it's still increasing. And then if you draw it all the way back out from mid-April, it's also increased quite a bit. So the trend line is definitely going down more. The price declines are expected, and sellers are going to have to adjust for that price decline. So as far as the apartment sales, it's even worse than townhomes. So we are definitely nowhere close to the amount of peak sales that we saw last year. And I don't think we're going to come anywhere close to it. We did have a rising momentum. I think we have found our top, and we're pretty much going to go this way and set a couple. I think this is going to be our sort of peak levels for the spring market for apartments, and then we're just going to go down from there, which is pretty bad when you compare it to, for example, August, September. That's usually not a great time, and then that's when that's what our spring's looking at like for apartments. Now let's look at the specific stats like before. So as far as the price drops for happening on the seller side, in March we were at 28% of apartments required price drops, then 33% in April, and now that's gone up to 38%. So that's obviously on a constant increase, and then that will also reflect on the buyer sentiment. So as you can see, the amount of properties selling below list price was 82%, dropped a little bit to 79, but then shot right back up to 85.49. So that will again reflect in price drops and properties selling below list price. So this looks like it's kind of like our top. So 92% of properties selling below list price, though they had price drops. Then that was 90% here for April, and finally in May, 92% again. So again, continue going up, downward pressure on prices, and increased inventory is definitely not helping. And as far as days on market, that's been on a constant rise, and it's even more than what I'm seeing in townhomes. So especially after May, it looks like all the market uncertainty actually had its impact on the apartments market, and the days on market has gone up significantly over the last 1 month. So it is definitely harder to sell an apartment in this market. You have to present really well, you have to price really well. There are a lot fewer buyers with a lot more options right now in the market. Now, taking a look at the exact sort of biggest gains, biggest losses, both month over month and year over year. If you want to look specifically for your area, definitely pause and look. I'm just going to highlight the biggest ones. So city center and west for detached saw the largest gains year over year. 2.8% for city center and 3.7% for west. So west is doing really well. Northeast, biggest decline month over month at minus 1.72%. And the biggest increase month over month was west at 2.18%. So, and as far as duplex homes go, the biggest increase here was 4.98% year over year, and the biggest increase again apart from that was 3.49 right behind. And then we can see the biggest decline month over month is Northeast at minus 1.63%, and the West went up by 2.68% month over month. As far as row townhomes go, the biggest increases is only 0.23% and 0.53%. 0.23 is for West, and no surprise there, and 0.53 is for East. Now, the biggest decline month over month is, of course, again, North, which is 1.81%, and there's a lot of townhomes coming up in that area. That's why they're seeing those corrections. And even East actually saw an increase month over month, but their sales are not doing too great, so I don't expect that to continue. As far as apartments go, you can see year over year 1.77% year over year increase for Northwest, again Northwest, and then finally West again increasing in apartments for 1.54%. And as far as month over month, 0.26% for South, and a decline of 1.5% for Southeast. So that's a huge decline for apartments in such a short time span. Now, how has all of this resulted in the final inventory sales? What does the graph look like? So as you can see here, the blue line's inventory consistently increasing month over month. As far as the sales go, it stagnated a little bit, and then because of the uncertainty right here, and we went up a little bit, but again, it's not enough compared to the amount of inventory increase we are seeing, and so that's why the prices have been declining as far as you month over month go. Ever since March, there's been overall benchmark price has been going down. Now, this is for all property types. This is total benchmark, so it does not reflect each segment, each area, and that's why hopefully this video is extremely helpful for you to understand exactly based on what you're looking to buy and what matters to you, depending on buying or selling, and how you should be either pricing your property or you should be designing your offers in this market going forward. And that is it for this month's video. Hopefully you found that extremely useful. Like I said, the Calgary real estate market is doing very well compared to a lot of the markets around Canada, despite what the headlines might tell you. A lot of the news is being generalized. They bucket everything in together and put those catchy headlines so that they get to clickbait and they get you to read their articles. But the Calgary real estate market is very different right now. And plus, within the Calgary real estate market, each property type, each district is performing differently. So depending whether you're a buyer, seller, or investor and what product type you are looking for and what your goals are, definitely reach out, because then I can provide you stats very specific to that property type and make sure you are being guided with the right knowledge so that you make an informed decision in 2025. And I would absolutely love to help you guys. My link's in the description. Book a consultation call and let's get on a call, identify your goals and set up a game plan for you so that you're not caught off guard and you know exactly what's coming. And like I said, I'm going to put out a video about the economy of Alberta, the housing market predictions by none other than Anne-Marie, who's the chief economist for the Calgary Real Estate Board. So this was a meeting that we had with her last week, and I've collected all the data, put together a presentation, and I'm going to present it and put a video out for you guys this week. So that's something you're not going to want to miss. And then apart from that, I also have a whole bunch of guides in the description that's available for free download and has helped so many buyers so far. And if you're not sure where in Calgary you want to live, which community you want to pick, which is best for you based on your lifestyle, for your kids, depending on the schools, that community guide is, and it's going to go over everything you absolutely need to make that decision with confidence and know how one community in Calgary is completely different from what another community in Calgary has to offer. Because Calgary, really, the way I say it, is a collection of much smaller cities. If anything, the lifestyle, the culture from one community to another is very, very different. And that's why it's a guide I wish I had when I moved to Calgary, and I look forward to making it so that I could give it to you guys and help you make more of an informed decision. And that is it for this month. Hope you guys enjoyed, and if you like this kind of content, definitely like, share, and subscribe. Of course, it helps me a lot reach more people like you and help more buyers and sellers in the market. I always believe that data is extremely important, and using data to help inform your decision without second guessing yourself while you're either making an offer or pricing a property is extremely important. I'll see you guys in the next video. Till then, take care.